What's up, traders? Welcome out to the Trade Masters webinar. This is Coach Tyler, the reigning champ, back again this week. Got Coach Frank in the hot seat.
I'm in the hot seat. Yeah, it is the hot seat.
Because my seat has been so cool the last 4 weeks. I'm just chilling every week.
I respect it.
Competitors, one after the other.
I respect it. I hate to have to do you like I'm about to do you, but I still do love and respect you. I'm just going to have to beat you up pretty good.
Listen, I always know you talk a good game, so let's do this for the masses, entertain them. But it's good to have you, Frank.
It's good to be here. Yeah, I don't get to come in very often, so I'm excited to be here. Certainly some interesting charts this week, right, with the market activity.
Yes, and I'm sure you and I are going to have plenty to say about what's going on in the market today and how that's influencing our picks. But let me set the stage. If there's anybody joining for the first time tonight, on behalf of Tackle Trading, we're excited you're here. Appreciate you for coming out. We're going to reward you for your viewership. We got 6 different trade ideas that are coming at you. We do this round by round. This is going to be a 3-round show. First round is going to be the Delta round, where Frank and I will pitch a directional trade, and you guys get a vote. We'll put up a poll in the YouTube chat. You'll be able to vote as to who you think won. Then we'll do round 2, which is a Theta round. We'll be pitching a cash flow related trade with options. And then round 3 will be a wild card, where Frank and I can pitch whatever our hearts desire. Best out of 3 wins, and they come back next week. So that's the name of the game for tonight. Before we hop in, though, I'm going to kick it to Frank. Frank has an announcement for another webinar we got coming up that we want to make sure you guys are aware of. So
yeah, for sure. I'm excited about this. I think the team will be excited as well. Next Monday night, that'll be the 6th of December, Coach Matt will be doing a covered call webinar right here on our YouTube channel at 8:30 Eastern. It is going to be awesome. Whether you're already trading covered calls or just getting into them, I assure you that Coach Matt has a trick or two that he can share to make that process a little bit better for you. It's going to be a lot of fun, very informative. Come on over and join us. You can hit that little reminder on the YouTube, on the Tackle Trading YouTube, so it'll kind of give you the ding when we are going live, so you don't forget it, because you're not going to want to miss this one. But looking forward to seeing you all there. I think it will be a really good learning experience. I know that the team's pretty excited about that one, Tyler.
Yeah, for sure. Listen, on these special webinars that we do on Mondays, every couple of weeks, we put in a lot of time and effort in creating a nice little presentation for you guys. So, not that Frank and I don't go above and beyond on Wednesdays on these Trade Masters, but a lot of time and effort goes into these. So we always appreciate you guys showing up and learning with us.
For sure. And I'm going to get that link right here in the YouTube chat if you want to go ahead and get that reminder set up. If you're like me, I have to have reminders or I forget, everything. I just stopped watching TV shows, mostly, Tyler, because I would just watch them for, every Sunday night. And then one day I would just forget, and then I'd be back to square one. So I hope that reminder can help folks out.
There's a low-hanging fruit joke come back for you, Frank, about the difficulty of a TV show being in the same time every week and how challenging it is to remember. But I'm going to let it go. I
appreciate you. I appreciate you doing that, sir.
All right, man. Let's do this.
Let's rock and roll.
Round 1, I will defer to Frank. Frank, pitch me a directional trade. Show me what you got.
All right. Well, there's not a lot of super clean charts out there right now, as I'm sure any trader knows. I'm not telling them anything they probably haven't seen with their own 2 eyes. But one thing that caught my eye was the way that Dell Technologies is holding up, DELL, in the face of some volatility in the in this market. Very clean breakout, just north of $58. We're holding support. We're still above the 50-day moving average. As of right now, I think we need to break out. I don't think this is currently giving us a situation where we could entertain the idea of front running the break. And simply, if you're unfamiliar with that term, that's just scaling in, maybe adding 25% of the trade here and then the rest of it when it actually ultimately, if it actually does break out. I am open to that, Tyler, but today's candle is not anywhere close to where that is something that we could really have a discussion. We would need some inside candlestick development, some shoring up that that intraday chart. That may or may not happen. So right now, nothing fancy here. This is just a good old fashioned break north of $58. The way I like to target my charts that look like this is I just take that range and use that as my target. That would put us at $62 for that target on Dell Technologies. Stop would want to be below the breakout channel. Again, it's hard to say for sure where that would need to be because I don't know what the candles are looking like right now, right? I do know it does need to be below that before, if I do end up getting the break and get that signal, but nothing crazy here. Break of 58, working to $62 with a stop loss below the breakout channel. Maybe there will be some inside candles or a rising 9 that will kind of stand out for stop loss placement when and if we do break out.
Nice, Frank. Coming in hot with Dell Technologies. I got a couple questions on this one.
Okay.
If this triggers tomorrow, first of all, that'd be great. That'd be epic, right?
Would be nice.
If it did, would you just basically say by default today's low would kind of be your go-to spot unless we have further development?
Yes, that would be a standout spot if that were to occur. Hopefully that doesn't, right? We generally prefer a little bit more development, but yes, that would be that would end up looking kind of like a double bottom, albeit somewhat ugly on that hourly intraday chart. So yeah, if we were to fire back right through that resistance tomorrow and hit that entry point, that would be a very logical place for a stop loss. The problem with that happening is risk to reward will not be good in that scenario, right? You wouldn't have to put the stop loss there. I do think it's important to note that is where I would like my stop is whatever the low is before we break out, right? That's where I would like it, but that doesn't mean that's where it has to be. It has to be below the breakout channel itself. That is a must have. And then I'll look to different time frames or intraday lows and double bottoms, things like that, to give myself options when it comes to placing the stop. Because I don't want to say this breaks resistance, I think it's going to $62, but the only logical, sensible place for a stop loss would be below, this 2-day low from, Friday or Monday and Tuesday and Wednesday. I forgot what day it is. I'm still getting back from holiday, Frank. So I wouldn't say it had to be below there. I would kind of see what it would look like. Where would my 2-to-1 be? I think we could still make that work below the breakout channel personally. But again, I guess that's just speaking my own personal rule. So I would like that, whatever the low before the breakout to be my stop loss. That is one of my kind of go-tos from a stop loss perspective personally, but it is not a must-have. It's I would like to have for me.
All right, second question. Trigger over the cluster here, or do you trigger over 58.29?
I think you go to the actual high. It's not that far off. I wouldn't argue too much if somebody, pushed back a little bit on that, but we're talking, 29, 30 cents to be above that resistance. It's not a whole lot that we're paying to make sure that we get that confirmation. So for me, yeah, I would want to take out that actual high. I think that's at like 58.26, if I'm not mistaken. So we're talking very, very little to make sure. I don't think that's a big deal. I think the price action that we saw when we got back into that 58 zone is telling the story, but man, it would be a bummer if I got in and that was a big deal. I'd feel like, oh, I should have saw that one coming. You know better than that, Frank. So yeah, I do think you want to take out those actual highs.
Okay. All right. So Frankie's coming with Dell Technologies. It's his directional pick. Let me go ahead and take it off now. I will tell you that trying to find a bullish directional trade, this was the hardest one for me. I can find a theta play. That's always pretty easy. Wild card market's crazy right now. I could find something crazy, but finding something that I want to buy directionally after we just had arguably the nastiest sell-off of the year, right? We have the biggest correction of the year when you take a look at small caps. This is the second biggest spike in volatility, the second most kind of panic-filled day we've had. And I would actually argue probably the first most, because the one in January wasn't even that bad. And now you're like, okay, what do you want to do? What do you want to go directional on here? The hard part for me, Frank, was even if I wanted to do a directional bear trade, who really wants to short right here?
Yeah,
Come on.
it's tough. It is tough. So extended to the downside, right, on so many of those charts that feels like you've got no good stop loss placement unless you are
Nope.
purely going kind of intraday bar by bar. Even bar by bar is difficult with the size of some of these candles.
Yes. So I hate shorting into the hole. Even if we keep going down 3 days, it's still not an easy trade. And then buying, they just took a wrecking ball to every chart. So what Frank and I had to do, independently, of course, was essentially say, okay, who didn't get the snot kicked out of them if we're going to buy? Could have gone bearish, but like I said, I don't like that side. So the Dell one was nice. So the area that I looked at for a bull play, I was scanning different sectors, seeing what's still holding up, and I really liked the home builders. I really like the home builders. They don't seem to care as much about what's going on with COVID and some of the recent issues that are plaguing the market. Home builders have been very strong on the last advance. I was looking at the weekly chart of XHB, and you just got a nice 2-bar retracement to the rising 9 EMA. If you asked me 2 weeks ago, hey, are you interested in a dip in this sector that just ran to a new high, ran up 7 straight weeks? Yeah, I'm interested. Gives me a nice little 2-bar pullback to the rising 9. It's a good pattern. It's a good pattern. The problem with XHB for me is the options aren't as liquid as I'd like. So I dug into the sector and found DR Horton, DHI, as a nice little bull retracement. So this is pulled back. It's between the 9 EMA and the 20 SMA. And I'd like to think, well, first of all, this did close in the green today, which is a feat in and of itself. Had the market not puked it up for the last hour of the day, this could have been a very nice bullish candle here, Frank. So I think part of the reason this sold off is it just got cut up with everything. They just sold everything at the end of the day. But it held the 20 MA. Not very many stocks are still above the 20 MA. So from just a pattern perspective, it's just a nice little bull retracement, bull flag, if you want to call it a bull flag. The candles are bigger, which is a challenge everybody has to deal with right now. So I'm struggling a little bit on a clean trigger. I just love the overall trend. For now, I would probably make this take out today's high or even yesterday's high, and ultimately just look for trend continuation, looking for this to get back up to 105 or so as a swing target. Stop loss would have to go below yesterday's low. At this point, I don't think you have a choice. So that would be if you were swing trading with stock. On the options front, I think you got a really easy bull call spread here. You could buy the 100 call, sell the 105 for January, little $5 spread. And you'd think that when you buy a $5 spread and the stock price or the strike price you're buying is close to the current price, usually it would cost you like $2.30 or so. I was impressed by how cheap this guy was. I've already built it here. Buy the 100, sell the 105. It's only $1.70. They're paying $1.70 for a $5 spread, so you can make $3.30. So it's a great risk reward. The risk is low enough where you don't have to use a stop loss if you want to give it a loose leash. And I think 105 is completely realistic. They liked home builders before the drama. It's held up during the drama. I think we get this out of the way and they come back to home builders and this thing has a good shot at 105. So that's my directional play. DHI bull retracement, 100, 105 bull call.
I do like it. And one thing that stood out when you're talking about where do you get in, if you actually look at it on an hourly time frame, which is my go-to on the intraday, you actually have a really clean double bottom, double top type situation developing. You identified it without actually, doing it, right, by looking at taking out those tops. But right now, if we can continue to hold and build this support, pushing through that would be a pretty good signal in my estimation as well. Risk to reward is there. You have to respect, you nail it. Things that have held up, relatively speaking, it's all relative, right? When the market's, as grumpy as it is right now. And so you're standing out, and that's always a good thing, right? It's a good thing to stand out. So I'm a fan. I like it. I think that's a really interesting way to play the space. And I do think that was probably the chart that I liked the most within that space, especially as far as actionable in the very, very near future. I do like XHB's chart on that weekly, but we still need a little bit of work there, maybe, right?
Yeah, you just need a reversal candle. It's kind of the same thing as Dell, where the setup is there. You just would prefer a little more development, right? Because in terms of XHB, I mean, what do? It's a huge bar.
Right.
You just need something smaller and a better trigger. DHI just seems a little bit closer, and the illiquidity and XHB options just make it.
Yeah, it makes
Honestly,
it tough,
I
right?
was going to pitch something at XHB, and I'm like, dude, I
It's
can't
a good
touch
looking
those options.
weekly. It's a
Yeah.
good looking weekly. I do like your choice in DHI over them, especially in the very, very near term, even though they will likely be moving together, right?
Yeah, typically they do. So, okay. Tanyan's
Awesome.
already put up the
He's
poll
got the
here.
vote. Folks are
Yeah.
voting.
Yeah.
We'll see who's they're liking. We'll give him just a moment there. I'm preparing to get beat up pretty good by you in round 2 in the theta round. I harbor no illusions that I'm going to have a good fighting shot at beating you at theta, but I'm gonna swing nonetheless.
Swing away. Let's go ahead and kick it off. I'll let you go first.
All right. Well, I am going to make a case for Alcoa. AA. And when I was first looking at Alcoa earlier in the day, it was before it had sold off so much. But what was really standing out, there's two things that were standing out on Alcoa. I was thinking about a bull put spread, the 200-day moving average staring at me right in the face, just south of us. And I also know my Alcoa, they've got a lot of history around $40, going back years and years and years and years. And so my premise was it's selling off pretty dramatically, like pretty much everything else. What would I feel comfortable betting on, right? Betting on a level of support holding. And between the history and that 40 and that 200-day moving average there at that $40 mark, Alcoa kind of stood out to me. I would like to go a little below 40 because I'm a wimp. I was actually looking at the 38.39 for December expiration here on Alcoa as a little bit of a way to take that bet, if you will, on that level holding up for us.
Your 38.39. Wait, sorry, Frankie. Are we talking naked put, bull put?
I wouldn't want to take ownership. That's not really my style, at least, as a general rule from a trading point of view. So I'd be looking at the bull put and selling the 39, and I would like to be wimpy. And so I was looking at the 38, making a pretty tight spread for December.
Okay, $1. All right. You're going to December.
Going to December expert. Yep, just the monthlies.
Short term. Yep. Okay.
And we are getting somewhere in the general ballpark of around 20 cents on that.
Yep.
A little bit above it. Our delta is right around 20 as well. I'll be honest, I don't like this style of trading. I need a candle, right? Even for my theta trading, I treat it very, very much as a directional trader. So even though it's better premium than it was earlier in the day, I like it a little bit less, even though the bet remains the same. I'd feel a heck of a lot better if I saw just some sort of intraday development, some sort of doji activity. I'm not the type of trader that does kind of, I know Coach Mark, he loves when things are tanking. He's a lot braver than me in that regard. That really is not my style, but I do like kind of the zone at that 40. I like being a little bit below that as a way to kind of fade the fear a little bit on Alcoa.
I like it. Listen, we all have the same issue trying to trigger off after a candle like today, right? The gutsiest thing you could have done was sell puts at the end of the day today. It's like, dude,
it would have been brave.
you jumped in front of the trade and you're like, look, you bozos are all panicking and freaking out. I'll sell you this overpriced insurance. Here you go. No confirmation. You're just, you guys are paying so much, sold to you. Yeah, look, I mean, a little hard to do. So I concur with you on the I'd rather get a bullish candle or something tomorrow to make me feel better to pull the trigger than just blindly do it now, even if I get less credit.
Totally exactly. So I'd love to get a little less credit, tomorrow afternoon or, the next day with some sort of establishment, because I do believe in the zone. I really do. I've seen a lot of weird stuff at $40 on Alcoa, so I do believe in the zone. But boy, I'm with you. That is a tough candle to want to do anything of the bullish nature on. So might need a day, see how it prices out. If we just snap back dramatically, probably the premium's gone. But maybe we can stabilize a little bit, get some development on the intraday.
Okay, so I have a question.
Okay.
You and I both know there are a million stocks out there that got smoked today. All went up. We could sell puts. As you were going through the charts, what made you like Alcoa versus any alternative?
There was a combination of two things, really. Again, I followed Alcoa for a long time, back when it was, a big component of the indexes before the split, back when it was the start to earning season, right? So part of it is I do have history with Alcoa around $40 and lots of it. So that was probably the biggest part that caught my eye. If I'm being honest, it was knowing that we've seen a lot of movement, both as support and resistance over the years at that price point. I didn't mind the premium. It didn't, it certainly didn't stand out as bad, right? I mean, that's really not generally a problem that you're getting right now, though. I mean, we are getting some pretty good premiums for a lot of the things that we're selling. So that's kind of where I was with Alcoa. I just like the combination of the $200 and the $40 mark as a strong catalyst for potential support holding.
I love it. And normally for a 16-day credit spread, it's like nothing. You got to go to the next month by default because there's just no juice there. To be able to get 22 cents on a $1 spread, I mean, for those that aren't used to doing $1 wide spreads, that would be the equivalent of $1.10 on a $5 spread. That's a lot of credit, right, for selling a 20 delta. So and that's in 16 days. So I don't have any argument against the strike and credit. I think it was plenty. All right.
But by the way, Ty, we just got our official results in. It was a beating, all right, but it was you who were delivering at 60 to 39%. You got me good that round, my friend.
Look, that's within margin of error. It's all good. It's all good. All right.
All good.
So Alcoa for Frank. So as I alluded to, theta play, we're selling options in some capacity, trying to get a high probability of making some money. Honestly, complain all you want about the market looking like garbage. Your silver lining is they're panicking in the streets right now. There's blood in the streets. They're freaking out about the Fed and tapering and Omicron and all that. And so, look, I mean, maybe it's justified and we continue to get smoked, but there's no denying if you're willing to step up and sell some insurance here, these people are paying you a lot of money. So it's not hard to find an interesting trade idea for selling puts. It's just a matter of, and it doesn't have to be selling puts, right, Frank? We could do cover calls, bull puts, et cetera. But in this type of environment, like, honestly, for people that have been in the game longer than a few days, you kind of like to see this fear. It reinflates option premiums. It increases your potential payday. So it was really just a matter of, kind of like Frank did, hey, what's a stock that I have an interest in here that I could sell something? Because they're all in the same boat to a certain extent. So I was looking at Tackle 25. I wanted a stock that has had relative strength and still looks okay. And so anyways, that brought me to Tackle 25. I was looking at Camping World. I used this earlier today for the Jedi Options segment. I'm going to do a little bit different trade idea, but let me tell you why I like the stock, right? So first of all, let's take a look at the weekly chart. This is a relatively grindy stock, kind of range bound, slow, steady moving. I say that knowing that it just went from $3 to $45, but the reality is most of that was one shot, and then it's kind of been stagnating. So if I look at the last year, I feel like cash flow trades have worked quite well on this. Covered calls, naked puts. And this was a great year for this to be in the Tackle 25 list. they're buying the dips. Every time it sells off, they're coming in and buying it. I like that personality. I like that personality for the type of trade I'm going to pitch today. The second thing is, this got clobbered today. It broke the 20. You could say, hey, that's a little bit concerning. But again, I don't know if you were paying attention today. They destroyed everything. It didn't matter. They liquidated everything. So I think it's hard to really pass too much judgment based on what happened today. What I find more interesting is before they completely destroyed the market, this thing was green. It was holding the 20 MA. I'm giving this a pass for today's big red bar,
Okay.
provided they'll let me go far enough out of the money and selling a put. This is going to be a naked put play because I think this is a cheap enough stock for it. So I was looking, Frank, like, look, I definitely want to be below the 200, right? I'd like to be below this range here.
Sure.
They're going to let me go almost down to $30, Frank.
Oh,
almost down to $30.
All right.
Which is really far away for Camping World. By the way, this had a really good response to earnings too. Really good response.
It was a real nice response.
They liked the last deal. And so what also makes Camping World interesting as a cash flow candidate is it's got really good premiums. And this is one of the reasons why I used it earlier today for a covered call. If you want just a quick pro tip on how do I know if a stock is good for things like covered calls and naked puts and credit spreads, go to the option chain, look at how many out of the money strikes there are that have decent premiums, say more than 50 cents. And I don't know why this is taking so long. What you'll discover with Camping World is there's loads of strikes available. First of all, there's a lot of strike prices to choose from that are in narrow increments. So you have lots of different deltas. And secondly, there's a fair bit of premium. So we'll see if this comes up, Frank, but I know the numbers because I built this earlier. The $30, look, anything selling puts below 35, anything below 35, I think is fair game. And we're going to use January options, right? So I'm willing to go from December to Jan. As I said earlier, I think it's hard for 2-week options. You got to go a little bit closer. And if they're going to let me go that much further out of the money, fine. I'll have an extra month of exposure. Jan options really aren't all that far away anyways. We're talking 45, 50 days or so. So the $30.90 put, I told you I knew what the numbers were, but now I don't remember. I think it was $45. I think it was $45. You can get $45 selling this $30.90. They have weird strike prices. $30.90 is the strike. $30.90. You can get about 45 bucks. They'll make you put up about 300. So I'm getting over a 10% return, more like 13 to 15% return. The delta was like 9. So I have like a 91% probability of profit. And honestly, I don't even know if I would mind buying it down there. I don't even know if I would mind buying it.
And you could start doing some more covered calls on it. Yeah, it would be. I would be open to that idea personally.
Yeah. So, like I said, I don't know. They're not giving me the strikes. Let me see if I can reload it. Yeah, it doesn't like Camping World. I can't build a trade, but trust me, the 30-90 strike, you could even do, like I said, anything a little bit higher than that. But the distance out of the money is crazy. And normally it's like you're cheating because there's an earnings announcement between now and then. That's why they're letting you get so far out of the money. You have to hold into earnings. That wasn't the case. I mean, this just had earnings beginning of November. So December, Jan, Feb, it's not till February. So we're still selling options that expire before earnings. So there's also no earnings risk. They just trade with high volatility in this stock. So anyways, got any feedback on that one, Frank?
I love that support zone. First off, around $35. So anything below 35 makes sense to me. And then it's kind of preference, comfort rules as far as that goes. I mean, obviously, getting way down at 30 and still getting a good premium is very enticing for sure. I like the idea. And I like the idea, as you said, they've been very range bound. They've been a very good covered call stock. So in the event that it does end up getting put to you, it just turn it to a boomerang, right? Start selling some covered calls against it, take ownership and cash flow it that way. So as far as candidates go, I love these guys as a candidate because they've got great support, great options, easy to want, at least for me. And again, it's just my opinion, but easy for me to want to take ownership and do some covered calls. I know a lot of members of the community have and have done very, very well with it. So I do like the idea quite a bit, and I do like that premium. That is definitely something that you are seeing across the board, right? Premiums are definitely popping right now.
You can be picky. You can definitely be picky. All right, they finally loaded the options here. So you actually have two choices. You got 3409, and then you have 3109. It's just crazy to me that you can go 10% further out of the money.
Yeah.
And still get, $45. So here's what I'm talking about with availability of strikes that have enough juice. You've got a ton of puts with various deltas, and I can go 1, 2, 3, 4, 5, 6, 7, 8 strikes out of the money, still get a good ROI. I love the availability of choices.
Oh yeah,
with this product.
Yeah, how do you not? And I like being conservative when you have an opportunity like you have here to still get a good premium and going that much further out. I'm going to side on the side of that, right? Because I would much rather, make the 40, 50 cents than maybe, even though probably have a good chance, a little less likely to pick up that little fatter premium. So probably a preference thing for sure. But I do like the idea of erring on the side of being a wimp personally.
Yep. Look, this is in this. If you ever want a cover for being a wimp, you just point people to what's going on in the market, right? You're like, what,
Yep.
do you want me to be a hero with this going on? That's crazy. That's crazy.
Yeah, that's very nice. That's very nice. Well, no surprise, Ty, as the votes come in, you stomped me on the theta round. I'm all right with getting stopped by Coach Tyler on the theta round.
Yeah. So the poll's up, right? So you guys vote. So Frank had Alcoa, I had Camping World. All right. So as that's coming in, Frank, let's kick off round 3. Wild card. Anything goes. Once again, I'll let you go first.
All right. Well, if you will let me go first, you know what? I'm going to start with a big old breakdown on Newmont Mining. I know they're extended to the downside, but they are dancing on in my opinion, very important support zone with a big gap between this zone and what is, quote unquote, next to hold them up. If this zone gives out, you are looking at a long ways to go. The 20 weekly is very, very far away, down at, around $47. You don't have anything on that daily chart. I even think the 50 weeklies right around there, down in that $47 range as well. There's just this big empty space that I'm seeing if this zone of support gives out. It is kind of a weird looking little cup and handle. We've tested on multiple occasions, and hey, maybe that support holds, right? That's clearly an important price for the buyers of Newmont Mining. That is not my opinion as of right now. That is, I wish I would have been buying it every time it got to this price, right? I would have been doing pretty well for myself. So I like these guys as a breakdown candidate with something like Newmont Mining. And in heightened volatility conditions, really there's 2 primary ways I like to go. I'm either going to work with the shares just for ease and convenience for tight stops, or I like to go into debit spreads and use the spread itself as the stop loss, right? So if I pay $2, I'm going into it thinking I'm risking $2, and that's fine. And I will close it back if and when I actually get legitimate buy signals. But I don't like to get, whipsaws really are very common in this type of environment, right? And I do personally believe one of the best ways to deal with them is by working with debit spreads and using the spread itself as the stop loss. That's likely the way I would look at something like Newmont if I did end up breaking through that support level. Probably look at something like right at or maybe a little bit out of the money bear put spread. I was looking earlier today, and the price might be a little different, but I was looking at the January 50-45, and I know it still needs to move down. It needs to break that support for confirmation. In my opinion, this is not a front running type of situation. But when I was looking at the January 50-45, and I was just kind of sniffing around a little bit, it was somewhere in the ballpark of around 90 cents, if I remember correctly. So would have been easy to work with at that price. And yes, I would expect that price will go up if I get my confirmation, but probably not dramatically. And basically look to work that space down to that next level where we do have a lot of stuff in that 47-48 range, particularly the 200 weekly. But I look at that space I say there's room for me to work there, even if it's not me taking the breakdown trade. If it's, hey, let's let this guy break down, and then the next sell signal I get after that, let's go into that particular trade. So I see a really good window of opportunity if this floor breaks. That's the big if, right? It didn't break last time, didn't break the time before. Maybe it won't break this time, but boy, it's knocking on the door. We'll have to see if it gets let in or not.
Yeah, Matt and I were talking about gold on halftime report today. It's just been so disappointing. So disappointing. I have no qualms with shorting something in the gold mining space. GDX, right? I mean, you had your moment of glory here in October, November, and like forget it, gone. I like it, Frank. I like it. So one question I have on this, with actually maybe you answered it. I'm with you. I like this better if it breaks. It's hard to front run in front of a major support level that
I don't
has not broken, right?
Yeah, there's no way to make anything if that support zone holds if we get in here, right?
Yeah.
It would be different if we were theoretically having this conversation even yesterday, right? Even yesterday, I don't know that I would have came to the conclude. I think I would have came to the same conclusion, but at least I could have entertained it because I mean, you wouldn't want to go short here and then hey, surprise, support holds. There's no way that you can win. That's one of those mistakes that we don't want to make those type of mistakes. So I am with you. I do think we need to take out, I call it break $53. I think that would be the confirmation that we would need to at least that what I would need to get rocking and rolling. Should get a good risk to reward if we're going a little bit out of the money on a debit spread as well. But I wouldn't fault anybody for, the short side. If we wanted to go pretty tight, some sort of momentum style stop loss, that would work. But in these type of market conditions, I do tend to like to give it room. I like to I really do like the debit spreads a lot in this type of environment.
Well, yeah, think about it. Tight stop. You got stopped out this morning of your bear trades. How much of a schmuck do you feel like right now?
You don't feel good. You feel like the market is rigged. So yes. You don't feel good.
Yeah, these gaps are tough. Yeah. All right, good. So Newmont Mining, little bear put on a long-term support break. I love it. Okay, so I'm gonna go a little more exotic.
All right.
I like this VIX spike. Selling anything works. Selling puts, but when you sell put spreads, you're making a directional bet. I mean, it is a bullish trade. What if I want to take advantage of the ostensibly expensive options, but not pick a direction? Well, then I'm doing something like an iron condor, where I'm selling out of the money calls and out of the money puts. And because correlation is so high and everything's kind of moving together, I don't think it's worth the extra effort of picking a stock to do this on. I think you just pick an index and do it on the overall market. Okay. So because we already do a lot of stuff on the Russell with cash flow condors and everything, I wanted to pick a little bit different index. So I'm just looking at SPY. Looking at SPY, and if I had no exposure here, Frank, like if I just didn't get punched in the face over the last week, I would be fine with stepping up and saying, I don't think the world's going to end. I'm selling put spreads. You bozos are buying the crap out of these out of money puts. Fine. Sold to you. Give me far enough out. I'm going to close my eyes and come back in 3 weeks. I think things will have settled down. But I'm going to assume you don't have the intestinal fortitude to step up and do that. And you want something a little more non-directional, right? More delta neutral, as we say. So instead of just selling out of the money puts, which I think is quite compelling, especially if you're willing to buy shares, I want to build a condor here. And I've kind of already drawn the lines in terms of what you can get for a decent credit.
Okay.
I am going to go all the way down to 400. Again, I'm going to use January options. So we're going to sell a bull put spread down at 400. And then we're going to complement that $5 wide. So 400, 395. I'm going to complement that with a bear call up around like 485. And it doesn't look like you're that far away, but you are. Okay.
Right.
we're being thrown off by what just happened today. And certainly if we continue to see the size of candles that we saw today, day after day after day, this Condor doesn't seem very good. But you have to realize that volatility is mean reverting. And today was more likely an outlier than it was the new normal, right?
Right.
Particularly, by the way, IWM, Frank, this dropped 5% today from top to bottom. I can't remember the last time we moved 5%.
It's been a while.
Intraday. Like I know with the Friday after Thanksgiving, I think you might have been
right with the gap, right?
But dude, we were up 2.5% this morning, and now we're down 2.5%. 5% move. Trust me, that is not the new normal. I'm not saying volatility won't persist. It will, but I don't think you're going to continue to see 5% daily swings. And if you do, it's not going to be every day. It's going to be rare. So bottom line is, I think that you are mistaken if you use today's bar as the new normal, the new ATR to expect. I think we'll settle down at some point. And so when I look at the distance out of the money here, 400. Let me actually just give you the. I've already built it right here. So 400, 395 bull put, and then 485, 490 bear call, getting about 90 cents. Okay, on a $5 spread, 91 cents. So your risk is 409. So the max loss you're going to get out early, but 91 on 409. So it's a 22% potential return. One of the things I like about that is if I make half my profit, I can bail and I've still made a 10, 11% return.
Right.
So even though you say, man, January is a long ways away, a lot can happen till, between now and then. You don't have to go the distance, man. All you need is the market to chill out. A couple weeks go by or volatility comes back down to earth and bail. Sometimes I think we forget that when you short volatility through a Condor, it doesn't mean you got to ride the thing to expiration. It could just be, hey, I'm short premium. If you give me a decent profit, in a couple of days when the VIX comes back down and the market settles, I could just bail. That's hard to do if you got 10% return up front because you need most of the credit. You got a 20% return up front, you can bail at 50%
right,
of
yeah,
gain.
A little easier to do, yeah.
Yeah, so it makes it easier for the early exit. I did want to go further out of the money on the call side because it doesn't look like you're that far away. But quite frankly, you can't. I mean, they just won't let you go far enough out and make enough premium. So $5 wide on both sides, tried to get around, 45 cents per side. That's what got me the 90 cents. And I think, look, 400 is pretty far away. So if this snowballs, I think you got a decent, range. Sorry, I'm doing this math wrong. I wanted to see percentage-wise how far out we're at. We're $73 out of the money from the peak. So market would have to basically morph into a 20% drop for us to get there. Could happen. I think it's unlikely though. And by the way, if it does, I would bail. If you exit at the short strike, the other thing I like about Condors in a high vol environment is your risk reward's pretty good.
Right.
If I can make $90 and it goes down there, I'm down 100. So it's about a 1-to-1 risk reward. That's not usual. If you do these in low vol environments, Frank, you're losing 2 times your potential reward if you're wrong, or 3 times your potential reward. But because the premium's so juicy, the risk reward's a little more balanced. In fairness, you will lose a little more on the call side. But dude, trust me, you're gonna be dancing in the street if the S&P gets up to 484.
Yeah,
you'll feel so good about life. You won't care that you got punched on this.
No, you would probably be more than happy to trade that wing of the Condor for that move in the market. I think that's a fair trade.
So I feel like it's a win-win. Yeah,
I like it. Makes sense.
All right, so I could keep going on that one. I think that's enough though. So for me, wild card S&P Condor to play the VIX spike, and then Frankie had the breakdown in Newmont Mining. So NEM Tanyan for Frank, and then SPY Condor for me. Now
it's all academic, Tyler. You beat me the first 2 rounds, so now it's just academic. Is it the sweep, or do I have something to build on for my next visit? Right. That's the question.
That is the question. Look, we'll see. I like them both. Frank, give me your best tip for what the heck to do when the market's doing this. This was a very hard trade masters to prep for. You and I were talking about that because the market's so gappy. So, what do you do?
Two things that I do. The first thing I do whenever there's a volatility spike, my wimpy side really comes out. I am a big believer of what's happening will continue to happen. So when the market's mellow, I just assume it's going to keep doing that forever. When there's a spike, even if it's a one day, I think, oh, there might be some VIX. And so what I tend to do is immediately on the volatility spike is immediately cut position sizes. That's the first thing that I do, because odds are, well, maybe not odds are, but there's at least a reasonable chance that it was just a bad day at the office, right? And I don't want to sit out and things like that. But at the same time, it gets tough. I mean, this is a tough directional environment. It does just enough to get you in. It's up 2%, at noon and down 2% by the close. That volatility is really, really tough to deal with. So one way to combat that is to take a smaller position size. I'm always a big fan of living to fight another day. The other thing I do is I kind of mentioned when we're talking about Newmont, is from a directional point of view, I do tend to lean a lot more heavily on debit spreads in this type of environment, because I have to respect that those candles are bigger. I have to respect that things are sticking their nose above these resistance levels. And, intraday almost means nothing, half the time in this type of environment. And I do believe that debit spreads are a really good way to help combat that volatility. I like to use them as a spread themselves. Personally, you don't have to do that. So those are kind of my first two things I do when I see volatility spikes: cut the positions and kind of lean more heavily on debit spreads than I typically maybe normally do.
Well, let me elaborate on that point for a second, because I think it's a really good point. You don't want to get whipped out of trades, and you acknowledge that's a greater risk because the market's crazy, right?
Yep.
So how do you avoid getting whipped out of trades, but not take a bunch of risk? Because on the flip side, it's like, well, Frank, if it goes against me, I don't want to have too much risk. I got to get out at some point. So the solution that Frank is proposing is, that's part of the reason why options are so great, is because you can do a defined risk trade where no matter what happens, you know how much money is on the line. And so that kind of alleviates the need of having a stop loss, right? So you're just being smarter about the way you structure your trade to try to sidestep the whipsaw where oftentimes people get whipped out, then it goes back in the right direction, and you feel like a schmuck. So
exactly. No one likes to be right and lose, right? If I'm wrong and I lose, I can live with that, but it's a lot more annoying to be right but lose. And I do believe that debit spreads are a great way to combat that. So I'm glad that I'm not the only one who feels that way.
No, I think it's smart, and I think that that's a gateway for stock traders. If the other option strategies don't interest you, like, here's a good use case where it's like, look, if ever there's a situation where if you want to keep trading and you don't want to pack it up till the market settles down and you hate that whipsaw, look, you can buy 2 shares of the stock and not use a stop loss, but why not do a debit spread instead? It just seems a smarter route. So totally agree.
So how about you? What is your advice? I'm curious.
Look, I think you always have a choice on this. I think the problem is I have positions going into this, right?
Mm-hmm.
So you have to ask yourself, okay, do I just want to bail on everything, not deal with this drama? Or do I want to just trade through it, right? My biggest problem is not new trades, Frank, it's existing trades, right? For new trades, look, if the market's a monster for the next week, I just won't do anything, right? It's like, look, I don't have to play. I'll take my ball and go home.
Right.
You work this out. Let me know when you're done. I'll come back and play when I think I got an edge. That's an easy decision for me to make. And that is, I think, one of the good decisions to make, is to say, look, know when to hold them, know when to fold them. I don't like this volatility. I'm just not going to play. But the problem is, what if you're already in, man? Like, so you have a choice. You either got knocked out of everything and you're done, in which case maybe you're just on the sidelines, or you're trading through this. And so that's the hardest part for me, Frank, because I have exposure. Like, I'm participating in this drama. It's really just about, like, okay, how do I live through this so that I don't lose too much money?
Right.
or
Yeah.
so that this one adverse scenario doesn't take back too many of the gains that I've accumulated this year. Because we've had a really good year. It's been 11 months of glory. And it's like, what, you want to give all that back in like 2 weeks? If so, you did something wrong, right? So just trying to be smart and strike the balance between not puking it up on a day like today, which I always regret, Frank. I feel like if I closed all my bull trades at the end of today, I don't even care if the market keeps going down. You do that enough, I think you regret making that decision.
Yeah, I would agree with that.
Because most of the time it's the wrong decision. And to be specific, I'm talking like when the market's down this much, when the VIX is up this much, show me how many times you puking up all your trades made sense. It rarely does. But on the other hand, if I don't do that, and this does continue to get out of hand, how do I make it so that it doesn't take me 6 months to make back whatever I lose over the next week or two, right?
Mhm.
And there's obviously that could be a conversation that takes 4 hours, and it depends on what kind of trades you have. That balance for me is the trickiest part. And I feel like I do a pretty good job, right? I've seen this movie before. Sometimes it just takes a while, right? Like short-term trades, yeah, just get knocked out of those, done, the pain stops. What about the core positions? What about the long-term stuff that you have to, of necessity, ride through volatility like this? What do you do with those? That's where I think position sizing, it becomes important. Well, look, man, if you put all your money in the one stock and it goes down 50%, I don't know about you, but I don't want to. I don't want to sit through a 50%
Right.
drop. You got to have a plan for that. So, scant on details, but those are the broad strokes of the things that I think about in a situation like this.
Nice. Always, yeah. It's always kind of the balance, right? I've got to deal with my existing stuff. Some of it's getting hit, right? Some of it's hitting stop losses. I was on the road when some of it happened, so I didn't even know until 2 hours later. It was kind of nice. But so it is. You kind of have to do the dance, both new opportunities and dealing with what you have already, which is always kind of the first and most important thing, right?
Yep.
Taking care of what you had. Your current trades is always more important than your theoretical future trade. So fine advice, Ty. Well, it was a lot of fun. You beat me up pretty good. Apparently I lied at the beginning when I said I was going to beat you up. It was you got me pretty good. The clean sweep, the broom emoji is coming out. I'm going to get you one of these days though, my friend.
But okay, here, in fairness, this was the worst possible day that you and I could meet. Your forte being nice, clean swing trade setups, Frank's squeaky clean charts. Wasn't a fair fight, to be honest.
I appreciate you saying that. I don't know if that's true or not. There are no clean charts out there, though, at least not many. That is for darn sure. And so that, don't, as we got wrapping up, don't force the issue. The market's not going anywhere, right? It's, make sure you're sticking with those rules and following your systems. Don't let the fear of something happening, get you into making some bad decisions, because the market's going to be here next week and next month and next year, right? So
totally agree. All right, on those wise words, ladies and gents, we'll let you guys go.
It was fun. Real quick, I'll throw that link to the YouTube webinar for our covered calls in the chat one more time for anybody who may have joined us a little bit late into the show. Hope to see you there. And you can set a reminder on YouTube. I didn't know that. Of course, no one ever accused me of being technologically savvy. You can set a reminder. It is very, very helpful. We'll hope to see you there. Coach Matt's going to do an awesome job talking the team through covered calls. So we'll see you then. It was a lot of fun. Thanks for